Hello and welcome to TradeFlow Television,
bringing you valuable analysis and actionable intelligence
through the global commodity markets.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets. Oil prices fell on Monday after pushing above $70 a barrel for the first time since the start of the coronavirus crisis, with support from U.S. stimulus and an attack on Saudi Arabian oil sites countered by global inflation fears. Brent, which initially surged to $71.38 a barrel, its highest since January 8, 2020, slipped by 73 cents, or 1%, on the day to $68.63 by 1500 GMT. The benchmark is still hovering around its highest level in more than a year. U.S. West Texas Intermediate (WTI) crude was down 63 cents, or 0.9%, at $65.46 after touching its highest since October 2018 at $67.98.
Argentine grains farmers are expected to rake in a record amount of much-needed export dollars this season, with high global prices, port strikes having been diffused and enough rain to relieve growing areas that had been dry for months. This year's harvest is crucial for the sector and Argentina's central government, which needs to refill its depleted foreign currency reserves after a sovereign default last year which has left bond prices at historic lows. The 2020-21 agricultural season should generate, at current prices, a record income of foreign currency from exports of about $37.5 billion, said Emil J. Terra, head economist at the major Rosario Grains Exchange.
Moving on to the top news in the energy sector.
Advocates of an oil price supercycle are having a good month. Having dipped below $20 a barrel last year because of a pandemic-related demand crunch, Brent crude prices on Monday regained pre-COVID-19 levels above $70. While energy could well remain expensive for most of 2021, it's harder to see how that persists. There are good reasons to be bullish this year. Morgan Stanley estimates global oil demand of 94.9 million barrels a day in the first quarter will outstrip supply. As populations are vaccinated and economies recover, the bank reckons demand will rise to almost 99 million barrels a day by the fourth quarter. Yet supply will keep undershooting.
The U.S. Departments of Agriculture and Energy plan to change two closely watched monthly reports to account for the rapid growth of renewable diesel, a clean-burning fuel made from soy and other fats and oils, officials told Reuters. Surging demand for renewable diesel is part of a larger global transition to green fuels, and could increase prices of crops such as soybeans and canola it is derived from. The U.S. Department of Agriculture, USDA, plans to adjust how it reports soy oil used in biofuel in its monthly World Agriculture Supply and Demand Estimates report as soon as this spring, an agency official told Reuters.
Next, we have the top news in metal markets.
Copper prices gained on Monday, breaching $9,000 a ton, after the U.S. Senate approved a $1.9 trillion economic stimulus package and top consumer China boosted imports of the metal while its exports hit records. China, which accounts for about half of all metals demand, imported 4.7% more copper in January to February despite a recent spike in prices while exports grew at a record pace. Benchmark 3-month copper on the London Metal Exchange, LME, rose 1.3% to $9,013 a ton by 17:05 GMT. The price is within striking distance of a near 10-year high of $9,617 a ton touched last month.
Chinese steel futures rose on Monday as improving profit margins in the world's top producer of the manufacturing and construction material buoyed sentiment, but key ingredient iron ore trimmed gains as port inventories hit a 3-month high. May construction steel rebar on the Shanghai Futures Exchange climbed 0.7% to 4,752 yuan, $729.49 a ton by 0700 GMT. May hot rolled coil, steel used in household appliances and car bodies, was up 1.6% at 4,964 yuan a ton, after earlier rising to 5,038 yuan, near a record peak of 5,088 yuan hit on March 3. We will now look at the top news in the agricultural sector. China imported 1.6 million tons of meat in the first 2 months of the year, customs data showed on Sunday, up 27.6% from the same period a year earlier, as the world's biggest consumer of animal protein stocked up to fill a domestic shortage. Shipments rose from last year's 1.26 million tons after China's output of pork, its staple meat, remained affected by an outbreak of African swine fever that began in 2018. China's pork output fell 3.3% in 2020 after plunging 21% the prior year, boosting meat imports to a record high, while imports were also impacted by COVID-19 quarantines.
That is all for today's news on the commodity market. Stay tuned to TradeFlow TV as we continue to provide you with more updates. You can also follow us on Twitter at TradeFlowtv1, which allows you to watch our program on your mobile device or desktop.